Hello everybody and welcome to Investing with Wesley. Today's episode I want to talk to you all about cash value life insurance. Now you may remember from my previous episode that when it comes to most consumer life insurance policies, there's either cash value or term. And in today's episode I'm going to tell you all there is to know about cash value and, in my opinion, why you shouldn't have a cash value policy. Let's get into it. So a cash value policy, whether it's whole life, variable universal variable life, there's 1,000 different names for them. Cash value life insurance is a life insurance policy and an investment bundled together. Now, most people are thinking, oh cool, I get two for the price of one. But there's some caveats to why cash value's investment side of things just really isn't worth it. Typically with cash value policies, you pay a higher premium per month for a lower death benefit when compared to term insurance. Now, a lot of salesmen will convince people to buy cash value life insurance because of the investment aspect. And they'll say, oh, it's for your retirement. Oh, it's for your kids' college savings. And although an investment is an investment, you shouldn't sell a cash value policy as if it's a retirement account, because it's not. It doesn't have the same benefits an IRA or a 401k might have. So with cash value policies, like I said a second ago, they do contain an investment. The problem with these investments, though, is typically they get lower returns than if you were to just invest your money in a real investment like stocks, bonds, mutual funds, ETFs. The fees with cash value are insane. Typically, if you check the balance of your cash value account after you put money in there, you usually won't see a balance for about the first 3 years. Now you can withdraw your cash value to do things like buy real estate or send your kids to college or anything you want to spend your money on. But unlike a regular investment where you withdraw your money, you get a check or wire transfer into your bank, you have to take a cash value policy as a loan. There is some benefits. For example, anytime you get a loan, that income is considered tax-free, because the government knows you have to pay it back. So if you have $100,000 in your life insurance policy and you want to use that, you can take that money tax-free. But there's other ways to get tax-free income, because if you take that money and you don't pay it back before you pass away, whatever money you took gets paid back from your life insurance policy. So if, again, you had $100,000 in life insurance and you borrowed $50,000, whoever your beneficiaries are only get $50,000, assuming you haven't paid a dime back. Now, some people might be thinking, oh, this is still a great opportunity for me to just throw some money into savings without even thinking about it and really build their net worth. But the biggest downfall, in my opinion, when it comes to cash value policies is that when you pass away, even if there's no loans against the policy, your beneficiaries usually have to pick one or the other. They don't get both. So what do I mean by that? If you have $100,000 in life insurance and $95,000 worth of cash value when you pass away, your beneficiaries have to pick whether they want the $100,000 or the $95,000. And whichever one they don't pick, the life insurance company that sold you that policy keeps it. So you've been paying a premium every month to build this cash value. Some people even put extra payments in there to build it quicker, all so that it can go to the life insurance company when you pass away, because your family and your beneficiaries are not entitled to both. Now, unfortunately, there's going to be some of you out there that have a cash value policy. You're listening to me saying, no, that can't be true. Mine's different. Or my cousin sold me this policy. He or she would never do that to me. My husband, my wife, my best friend from college, they sold me this policy. They would never do that to me. Now, I'm not going to deny your best friends and family members wouldn't do that to you. The problem is a lot of agents don't necessarily know that's exactly how cash value policies work. When they get the job at whatever life insurance company they work for, they're taught to sell for these reasons, not necessarily the whole landscape on how cash value really works. So don't be mad at your cousin, don't be mad at your best friend. They may not know. Now, for the people that do know how bad cash value life insurance is and that sell it anyway, it's always for one reason. The commissions they get for selling cash value life insurance are usually double what they would get if they just sold a regular term life insurance. Okay, I've spent quite a few minutes right now just beating up cash value policy. Let's talk about some of the pros. One pro compared to term is that it does last forever or until you pass away. Typically, the age of maturity on a cash value policy is age 120. And let's be real, very few people make it to 120, so that's why they say it lasts forever. Now, let's just say you do make it to 120. When you're at age 120 and your policy matures, the cash value is what you get. You don't get the life insurance because your policy has matured. So whatever you have in cash value is the check they send you. Now, if you make it to that age and they do send you the check, be prepared to pay taxes on it, because while your money's growing, it is tax deferred and not tax free. The income you receive that's tax free is only if you use that as a loan. Now, for those of you that are unlucky, that have been duped into buying a cash value policy, there is some good and bad news. The good news is you can change your policy to a term policy and take your cash value and basically run. The bad news is you can't take it all. Usually with cash value policies, there's a 7 to 9 year surrender fee, which means any money you've put in within 7 to 9 years, or whatever the surrender term is, that money can be forfeited basically. Or in some policies, a percentage. I looked at one policy the other day and it was a 7-year surrender period of 80% of whatever you've put in there within the 7 years. So if you've had this policy more than 7 years, from 7 years beyond, that's all your money that you could take and run. From 7 years to the present, that's subject to 80% surrender value fee. Now that's a giant hit, I get it, especially if you have a lot of cash value that you've been putting in. But unfortunately, it's a hit we have to take, because if we're going to switch you from cash value to term and then move your money from the cash value into a real investment where your family can have the life insurance and the investment if you pass away, it's a hit we have to take. Because if you wait 40 years from now, you pass away and your cash value has tripled, you've wasted that much more money than if we just take the bite right now. If you have $100,000 in the cash value side of the policy and you want to use it without taking a loan against it, the only way to do that is to close your life insurance account. They'll completely close everything, take any surrender fees that need to be paid back to the company, and then send you the remainder. That's why most people that have cash values will use the loan method and take the income tax-free. Now, there's some very advanced methods that the wealthy use with cash value to avoid things like estate taxes and, other asset protection avenues. But for your average family, it's not worth it, because you don't have as many assets as the ultra wealthy that use this strategy. There's also an advanced strategy called the infinite banking concept, and I'll make a video on this later on how you can actually use a regular investment account, not a cash value policy, but a regular investment, to do the infinite banking concept, because it's something I'm a huge advocate for, but not when it comes to using a cash value life insurance policy. For all the reasons I mentioned, you build your wealth in this policy and then give it completely up to the life insurance company when you pass away. That's not what I'm about. That's not okay, in my opinion. You should be able to build your wealth and leave every last dime that you have to your families. No one should come knocking at your door saying, "Oh, sorry, you only get this because we kept the other half." It's not how it should work. So when it comes to the infinite banking process, a brief overview is typically it's sold in connection with the cash value policy as the vehicle in doing the concept. Now, the concept is your investment will accrue compounding interest and grow over time with whatever interest rate it's getting. Now, the average I've seen when it comes to cash value life insurance policies is anywhere from 3 to 5%. That portion of things doesn't matter though. The concept is you take a loan against your policy and use that as tax-free income to pay for whatever you need to pay for, whether it's home maintenance, a vacation, put that money towards another investment, whatever the reason might be. You take the loan from the investment side of the cash value policy and use the loan proceeds for whatever you're going to do. Now, what this does is leave your money in the cash value policy at its total amount to continue to grow. $100,000 getting 5% interest will get a lot more money than $5,000 getting 5% interest. So that's the concept. You leave your money in this account to continue to compound, but you also get the benefit of using that money. Now, granted, it's still a loan. You still have to pay it back. And the interest rates are anywhere from 4 to 8%, depending on your credit. But in some cases, taking the loan and using that money in the way I just described is more beneficial than withdrawing money, paying the taxes on it, and using that. Now, later on when we start talking about investing, and I actually have in my schedule a dedicated video on how to do the infinite banking concept without cash value policy. So later on, I'm going to get into how you do all of that, as long as you stick around. If you're concerned you have a cash value policy, or if you know you have a cash value policy and you just want to know how bad it is, feel free to reach out. I'd gladly take a look at it for you and let you know exactly what it does do, what it doesn't do, and what those surrender fees are if you're thinking about changing. As always, I appreciate you taking the time to watch this video and learn more about the life insurances, and specifically in this video, cash value life insurance. Please like and subscribe to help the YouTube algorithm and help me get out there more and help other families and stop this travesty of cash value life insurance from happening. Until our next video, I hope you have a good one.